Look, for years we've been ripped off and taken advantage of by China and others, in all fairness, but by China, that's the big one. And it's just one of those things. You know, we're making $2 billion a day right now, this country. $2 billion a day with tariffs. And they were making $2 billion a day. We'll be making more. Now, when you see what happened today, I don't know if it's still there. You know, I looked an hour ago, but we're up like close to 3,000 points. Nobody's ever seen a day like that. I think that's a record, isn't it, fellas? Yeah, fairly. Is that a record? Who would have thought we were going to have a record like that after watching? But because the geniuses of the world, they get it. Our country is very strong. We were left a very, very weakened country, both economically, financially, because of all of the tariffs and all of the other companies just raiding us and ripping us off.
And that's President Trump yesterday, after issuing that 90-day pause on reciprocal tariffs for some countries while keeping the 10% baseline tariff in place, while also raising the tariff on China to 125% effective immediately. The president said that was because of a lack of respect that Beijing has shown the world markets with its retaliation against the U.S. The president also told reporters he's still open to meeting with Xi Jinping.
No, sure I would. He's a friend of mine. I like him. President Xi, I like him. I respect him. But they haven't treated our country right. Sure, I'd meet with him. On the other countries, we have Japan is here, and South Korea is here, and others are here. And we're trying to see them. It's, from what I hear, it's much more than 75. I said 75 plus. So many. It's everybody wants to make a deal, actually. And you know, we want to do what's right for our country. We also want to do what's right for the world. The world is important. I mean, you know, it's the world, right? And I think we're going to make a lot of people very happy. And I think investing in the United States of America will be the greatest investment that anybody's ever made.
The president keeping allies close with this new tariff plan. Joining me now is Gatestone Institute senior fellow and the author of Plan Red, China's Project to Destroy America. Gordon Chang back with us. Gordon, great to see you. Your reaction to all that has taken place here. I don't know why Xi Jinping doesn't just pick up the phone and call President Trump and try to do a deal rather than back and forth with this retaliation.
Yeah. Picking up the phone and calling President Trump would be the economically rational thing to do. China absolutely needs to do that. But Xi Jinping has configured the Chinese political system so that only the most hostile answers are considered to be acceptable, which means he's boxed himself in. He can't do that because if he does that, his Communist Party fellow leaders, they're going to criticize him. So right now, China's in a position where it can't do what it absolutely needs to do.
And I think they're trying to pressure U.S. markets. When they saw the Politburo and Xi Jinping and his leadership team, when they saw the markets were down 2,000 points, 2 days in a row, trillions of market value lost, they tried to pile on. In fact, there was an issue yesterday in the bond market where rates were spiking. And I was questioning what's going on in the bond market today. Was it a trade gone wrong, or is China selling treasuries? And I spoke with the Treasury Secretary about it. I asked Scott Bessent just that. Watch this.
There's one of these deleveraging convulsions that's going on right now in the markets, and you know, I think it's in the fixed income market. There's some very large leverage players who are experiencing losses. They're having to deleverage. I believe that there is nothing systemic about this. I think that it is an uncomfortable but normal deleveraging that's going on in the bond market, and I expect that as we see the leverage come down, the risk managers tapping people on the shoulders, telling them to bring their books down, which is what happens every couple of years as leverage builds up, then the market will calm down.
Is China jumping treasuries to try to put pressure on this this market?
Yeah, I think it works against their purposes if they are dumping treasuries, because you know, if they're dumping treasuries, then they have to buy something else. If they sell dollars, then they strengthen their currency. And as I said earlier, they've actually been weakening their currency, which is a loser for everyone.
Right.
And again, when I hear all these stories that the dollar is no longer going to be the reserve currency. You know, if you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset to me.
I was really happy to get the Secretary's commentary on the dollar, and he reiterated the U.S.'s position toward a strong dollar. But what do you think? I remember during the financial crisis back in 2007, China and Russia tried to team up, pile on, sell treasuries to pressure the market. So that immediately came to me when I saw that spike in rates yesterday.
Yeah, I think that's part of the answer of what the Chinese were doing, because they do want to put pressure on President Trump.
Yeah.
But the other thing, though, is, yes, they want their currency to weaken, but they don't want it to weaken too fast because they're worried about capital flight. So I think that they have to sell treasuries, dollar-denominated assets, to support the renminbi. But the thing that's really interesting, is that President Trump looks at this and says, I'm not afraid of you, China.
Yeah. He really did.
And the reason is, look, the Chinese don't have any cards in this. As the Treasury Secretary said, they're only holding a pair of twos, and Trump has a royal straight flush. But the point here, though, is that the Chinese think, well, we can intimidate Trump. We can coerce him into surrendering preemptively. And Trump yesterday said, look, 125% tariffs. I'm not being coerced. I'm not being intimidated. You, China, you're the ones who have to back down.
Yeah, and I love the fact that President Trump will always say things like, yeah, I want to meet him. He's my friend. We get along great, while at the same time is, putting a 125% tariff on the country. He knows his customer in communist China. And the U.S. signed a new security and defense pact to reinforce control over the Panama Canal. Pete Hegseth down at the canal, the defense secretary, announced the pact during a joint press conference in Panama City yesterday. Watch this.
We also signed, with the Minister of Canal Affairs, a framework for U.S. military and auxiliary ships to travel through the Panama Canal first and free. First and free. We're working with them to ensure that we take back the canal from malign Chinese influence. And these two documents, I think, create a historic baseline and send a clear message to the region and the communist Chinese that America will stand by our allies, keep key terrain free, so that our ships, our military vessels, our auxiliary vessels are free to traverse anytime they need for any contingency around the world.
So it's another thing that China is upset about, that the U.S. is taking back the Panama Canal. And, it seems to me that China's on its back heels right now. I mean, with all of these moves from President Trump, what do you think about the Chinese economy? What's the impact here?
Well, the Chinese economy is probably around zero. And we see from the price signals, it's in a deflationary spiral down, which is really inconsistent with 5.0% growth that they reported for last year. So this is coming at a time where China's having its 2008. In 2008, they didn't want to have a recession, so they overstimulated their economy. They've accumulated all this debt. They don't know what to do with it because this debt is internal, which means if you try to resolve it, local parties are going to get hurt. They don't have the political will to do that. They got their 2008. They got Trump on tariffs. They got deglobalization. This is all hitting China at the same time, and they have no answers to this in Beijing.
Yeah, and you would think that they would come back and try to, schmooze Trump, try to get in his favor. But he recognizes that they're in a weakened position, and that 125% tariff's only going to make things worse. We'll see if they blink.
Yeah.
And who blinks first. South Korean officials are ready to talk about tariffs going down with the U.S. The country will hold snap elections in June, June 3rd, to choose a successor to former President Yoon Suk-yeol. He was ousted last year after briefly imposing martial law in the country, sparking those protests and riots. Gordon, what do you think about this? You said democracy is at risk in this presidential election, and it could affect trade deals as well.
Yeah, the leading candidate for the June 3rd election is a guy named Lee Jae-myung. And Lee Jae-myung is basically a communist, although he can't say that because he's running for president. But the problem is he's very pro-China, very pro-North Korea, anti-U.S., anti-Japan.
I see.
And so we're in a risk here because South Korea could really go red very quickly.
Wow.
But the point is, on trade deals, Yi doesn't like the United States, so he doesn't want a trade deal with the U.S. He wants to kick our troops off the peninsula. He called them an occupying force. That's crazy.
Yeah.
So, right now, things are very much at a point where this is the most important election in South Korea's history, June 3rd.
I'll tell you, what a difference this president and this administration is relative to the last one, where, the Oversight Committee was investigating all the money that the Biden family took in from communist China.
Yeah, and that certainly affected Biden's decision. Biden certainly acted like he was afraid of China.
Yeah.
You know, this was really bad, and it was important for President Trump to win, you know, and this is November 5, I think, is going to be looked at as a turning point in American history. This is the golden age.
And I wonder if this whole time it was about China, that President Trump needed to put China in a corner, and he wanted to do so in tariffs, and all of this other drama around it was never the focus. I don't know. I'm beginning to see it that way. Gordon, it's great to see you.
Thanks,
Thank you
Maria.
so much. Gordon Chang here.
All right, we're going to come back and hit you with some tariff updates because news is breaking. The first one I know of is Trump has just said, effective immediately, the tariffs on China move from 104%. Larry, I think he's trying to make you happy, up to 125%. So let's talk about that. Do we have the
Yes.
other? Okay, we got another one too. I'm just going to keep giving them to you.
Yeah,
So we
here's
got
the
that. And Dagan, I'm going to turn over to you.
No, you go, because this is even
I'm
bigger
hearing
news.
He's authorized a 90-day pause
90-day.
on tariffs that applies to reciprocal and the 10% tariff, a 90-day pause effective immediately. Look at the straight shoot up line on your screen.
Yes.
Markets desperate for this news, and they got it.
For all countries?
I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately. You want me to read it, Larry?
Yes, please.
So 125% tariff on China because we crush you. How about that? Those were my words.
Yes, ma'am.
I'm getting down to no monetary. These countries.
5.5%.
Is the pause for all countries?
At my suggestion, it just says I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%.
Right.
Effective immediately.
These, as I said, these tariffs, by the way, are unsustainable anyway. So this is a reality check, but this is very, very good. How's the market must be doing?
It's on a tear.
Yeah,
so
the
the
Dow
Dow
is
is
as high
up
as
3.5. The Nasdaq is up 4.9. The S&P 500 is up 4%. The Russell 2000 is up 3.6%. The Nasdaq 100 5.3%. VIX falls to 40. Traders pare back all of their bets on Fed rate cuts.
It's the
90-day pause.
Based on the fact that more than 75 countries have called the trade rep, commerce, treasury, and to negotiate a solution to the subjects being discussed relative to all the trade and trade barriers, non-tariff. These countries have not, at my strong suggestion, retaliated in any way, shape, or form against the United States to those 75 countries.
Oh, fabulous.
That's the way
Even
it
better.
sounds. I have authorized a 90-day
He's giving them
pause.
a 90-day pause.
So,
That's the way it reads.
And then he just ratcheted up China, so you got to imagine China's not on that list.
Right.
So
I would. This is so good because 70 countries coming in, you're going to make deals, but it's going to take time, resources, okay? So he's pausing the whole process in order to make a deal. This is so good. And he's lowering these reciprocal tariff charges, which were way too high to begin with because they were based on trade deficits and made no sense whatsoever. So this is like a home run. This is, if I may, this is common sense Donald Trump.
And the market.
Common sense businessman
serious
Donald
question.
Trump.
The market rallied on this rumor, mistakenly reported on Monday, the same way it's rallying now.
Yes.
But on Sunday night, traders were telling me that that's what the market wanted. This was. You couldn't have given them a bigger gift.
This
than
is
today.
phenomenal.
I have a serious question,
phenomenal.
Larry.
This is off the charts good. This is the most brilliant thing. He's such a realist. He's got, if I was in the Oval 100 times over 3 years, every time I was in, he'd ask me, what's the market doing?
Yeah.
I know. The market said, no, you got them too much, too soon, too fast, etc. So he listened. And he's getting advice from a lot of people, I'm not going to name any names, about how to play this card. And he's got Bassett in charge of deals, and it'll all take. This is just wonderful. This is Trump at his best.
So 90-day pause, and then the reciprocal tariffs go down to 10% for these 75 nations that have not retaliated against the United States. But I wrote this down on my little folder that you said this was weeks and weeks ago. And I would bet you, and you can tell me I'm crazy, that POTUS and Scott Bessent like to watch the 10-year Treasury and the 10-year rate, the yield.
Yields are holding steady.
I wonder, given what happened with the 10-year yield and the 30-year, the long bond overnight, if that wasn't at least some impetus to, again, this is a door opening. This is a way forward for the United States and our trading partners who we stand strong with.
This is good management
Yes.
of policy. This is good execution of policy. It shows his flexibility. It shows his common sense. He's adapting to the reality, okay? Look, you had stock market vigilantes, you had bond market vigilantes saying with this tariff thing, it's way too big, way too soon, way too far, okay?
Yeah.
He is right. I will back him on the crusade or the policy goal of stopping the unfair trading practices that have existed now for decades. He is correct. His idea of reciprocity, which should lead to freer trade and lower tariffs over time, is exactly correct. It's just terrific stuff.
Dow's up almost 6%.
Now he's adjusting, right? I mean, this is so
well,
joyful.
Well, we have a good problem because I think, correct me if I'm wrong, we always talk about halting trading for 15 minutes when you hit a limit down of 7%. I believe that also applies to the upside of 7%. We're not there yet, but you have an S&P up 6.7%.
And what would the...
I thought the first limit up is 7, and then 13, and then 20. I know that to the downside. I think it also applies to the upside. We'll see. The S&P 500 right now is up 7%.
Okay, so
the NASDAQ is up 8.7% on the day.
You're out jockeying my bid to cover.
I know. See?
If you have the upper bounds, for the interventions, that's even better than bid to cover.
There are no circuit breakers on the upside.
On the upside, good.
There are no circuit breakers
so
on
let
the
rip.
downside.
Just let her rip.
Wow. Wow.
Okay, so Larry, I'm trying to interpret what's happening here. This is a huge policy change relative to what we were hearing like 5 days ago.
Not a policy.
Let me finish, okay?
All right.
I got to ask a question.
He did it. I didn't. I'm not the one. Thank Jesus.
So my point is,
up 9%.
Larry, my point is, we've been hinting at this. This, to me, looks like confirmation of a sea change in terms of who has priority in the White House on advising on the path forward with tariffs and taxes and policy, Larry. Am I directionally correct on that?
Yes. I wouldn't, however, and I didn't mean to interrupt, honestly.
Happens all the time.
Look, Jackie told me to pipe down the other time.
I'm sorry.
I was fine with it. No, it's okay. You got to whip me in the
kidding.
shade. I love this group, everyone on this table. So look, the policy remains the same. What's changing is the execution of the policy. Okay, that's how I would interpret that. Now, your point about bond.
No, my point, I'm saying Bessent is driving. He's got the wheel, and the other guys are in the back seat at best.
Bessent is,
putting it mildly.
One of Bessent's terrific value adds, okay, is his knowledge of markets and market strategies and market developments, okay? He's the link to the markets, as a good Treasury Secretary should be. Incidentally, we had Steve Mnuchin in Treasury. It was the same thing. I had because of my background, but it's what a good Treasury Secretary should do.
Right.
And he's reporting to Trump. Here's the thing. A news report Sunday, over the weekend, Scott Bessent flew down to Florida in order to get on Air Force One and come back to Washington with Trump. And they had a conversation about the markets and, life, liberty, and the pursuit of happiness, all right? And so what happens subsequently after this plane ride, right? Bessent is put in charge of the deal making, and now this is earth-shaking news. The 90-day pause, is that what it is?
Yes.
Can I ask you a question on that 90-day pause?
This has Bessent written all over it. Yes, please.
So, and correct me if I'm wrong, some part of me wonders if a 90-day pause, I think it is good. Clearly, the market's responding. But if I'm a business leader, I'm now trying to figure out not what I'm doing today, but now what my world looks like 90 days from now. Does that not delay some of the uncertainty, or is this confirmation that we can get deals done in 90 days? You know, was it Jamie Dimon or Scott Besson was one that says these are 1,000 pages. We need months to get these deals done. If I'm a business leader and I'm trying to figure out if I'm hiring, firing, building or not, spending CapEx or not, what do I now do for the next 90 days?
Well, that's a super good question. I would look at it this way. Business people have to seize opportunities in whatever markets they're operating. So they're going to make a bet. I think some people might bet on a retreat. Other people said, no, wait a second. They're pausing to make deals, to make this much more manageable.
Right.
You know, most people believe that we should fight back on unfair trading practices. It's just that this was too much, okay? Wow. Now this is being pared down.
But this got them to the table.
Well, yes, it did, as a matter of fact. Yes, that's important. Part of Trump's negotiating skills. Bash him and then bring him to the table. That's what you do in the real estate business in New York. You kick them in the teeth, and then after this, they're done with the surgery, they come back and you get a better deal. That was a joke, but only partly a joke. So your point, there's a lot of opportunities here for businesses.
Welcome back. Breaking this morning, China says it will impose an 84% tariff on U.S. goods. Another retaliation move in response to President Trump's reciprocal tariffs. Those tariffs took effect last night at midnight, including the 104% tariff on China. Joining me now is U.S. Treasury Secretary Scott Bessent. Mr. Secretary, thanks so much for joining me this morning.
Morning, Maria.
Well, I want to start right there. Give us your reaction to more escalation coming out of China, taking their tariffs up to 84% on top of President Trump's retaliatory tariffs.
Well, Maria, I think it's unfortunate that the Chinese actually don't want to come and negotiate because they are the worst offenders in the international trading system. They have the most imbalanced economy in the history of the modern world. And I can tell you that this escalation is a loser for them, that they have some very smart, the economists, the academicians, technocrats within their bureaucracy, and they would be telling the leadership that we do not have the edge here. They are the surplus country, that their exports to the U.S. are 5 times our exports to China. So they can raise their tariffs, but so what?
So let's talk about this for a second, because I wonder, I agree with you. I mean, I think that China needs the United States so much more than the U.S. needs China. But the economies are so connected, Secretary. You know, we're buying all this cheap stuff. People expect things to be cheap, and we know it's because they're made in China. And it feels like a soft war right now with China. Are there any areas or opportunities to give companies the time to move those supply chains to America so that we don't have to rely so much on China? This can't happen overnight, right? Even though China is the enemy, the #1 adversary, and we are in this soft war and they're escalating this right now, are the near-term effects such that the U.S. gets impacted negatively first?
Well, again, Maria, no one wins in a war, but it's proportionality, and the proportionality for the Chinese is going to be much worse. And the other thing too is, Maria, what would be a very good step with the Chinese would be acknowledging that the precursor chemicals for fentanyl come from China. They make their way into North America and then are sold into the U.S. We have more than 100,000 American citizens dying every year. And so China, a very good start would be for them to make a gesture on the precursor fentanyls, because, distributing drugs in China is punishable by death. Why don't they apply the same standards to the people who are exporting these chemicals to the U.S.?
Yeah. Well, it's true, and that's where this all started. President Trump said that he was putting tariffs in place on China as a result of their failure to stop the fentanyl flow. But now people are wondering, is that still the reason to put tariffs on China? Is it to raise revenue? Is it to get supply chains into America? Is it to answer, the fentanyl problem? Business leaders are saying to me, why are we doing this? Everyone was very excited about President Trump's agenda, deregulation, tapping into energy, tax cuts. And now, boom, with these tariffs, everything has changed. Why are we doing this?
Well, Maria, I think it's, as you said in the last segment, it's all of the above. President Trump was elected with a mandate. He's closed the border, so check on that. We are doing the very large deportation of people, criminals, and people who have overstayed their visits, their period. So we're in the midst of that. And now President Trump is tackling the trade agenda. And this isn't done in isolation, Maria. As you just interviewed Senator Haggerty, we're running the parallel processes here. So there's tariff, there's tax.
Yeah.
Tax is going extremely well. That the Speaker Johnson, Leader Thune, from the leadership of people like Senator Haggerty, Jason Smith, Senator Crapo, I can tell you that that's going very well.
Yeah.
So at a point in the not too distant future, I think we will be back to firing on all cylinders. We have the response to the countries who want to come and sit at the table rather than escalate has been overwhelming.
Yeah.
Our allies, Japan, South Korea, India, and I will note that they are all around China. We have Vietnam coming today.
Yeah.
So everyone is coming to the table, and basically China's surrounded. The other thing
That's a very good point.
The other thing that I would note is that a Spanish official said today that maybe Europe should look to China instead of the U.S. And I can tell you that is a losing proposition for the Europeans, because what is going to happen, and we've already seen it starting last week, that as we put up the tariff wall, China's business model is predicated on this incredibly imbalanced economy and exporting low-cost goods and subsidized goods to the rest of the world. And guess where they are going to land? On the European shores. So our allies, part of our discussion, as our allies come in and talk to us, is how do we get China to rebalance? That is the big win here.
Yeah.
That the U.S. is trying to rebalance toward more manufacturing. China needs to rebalance towards more consumption. If at a point we can move to that, then we can move together.
Yeah.
If they will acknowledge this fentanyl problem. So we have to have an end to these mercantilist policies. President Trump made that a priority.
That's right.
Just as tax is a priority.
Well, this is all really important points, and I want to get to tax in a second. But in terms of the message, you just sent a great message to the Europeans. Let's hope they get it. In terms of the Chinese economy right now, you have to believe that 104% tariff on Chinese goods coming in is going to have a huge impact on the Chinese economy. How would you assess the Chinese economy right now?
Well, look, they were in a recession/depression due to a real estate collapse that had a real estate bubble that is deflating. That had been going on for years, and the economy was in terrible shape. So, again, they're going to go from bad to terrible. And that which is unsustainable will be unsustainable.
Yeah.
The other thing that the Chinese should not do is try to devalue their way out of this, because back to our European friends, our Japanese allies, our Korean allies, the Vietnamese, if China starts devaluing, then that is a tax on the rest of the world, and everyone will have to keep raising their tariffs to offset the devaluation.
Yeah.
So I would urge them not to do that, and to come to the table.
So, I mean, one more question on China, then I want to get to your talks on the tax extensions. How far are you willing to take this in terms of this soft war with China? We've got Chinese stocks trading on U.S. exchanges. U.S. investors are buying those stocks, and that's helping China fund its military. Let's face it. Are you willing to go that far to remove Chinese stocks from U.S. exchanges?
Maria, I think everything's on the table. We are putting in process export controls for high value security related goods. We are talking about the export capital controls in terms of, as you said, a blacklist of things that U.S. Whether pension funds, endowments, investors should not be investing in to fund the Chinese military machine. But that'll be President Trump's decision. And you know what, Maria, at the end of the day, President Trump, Chairman Xi have a very good personal relationship, and I am confident that this will be resolved at the highest levels.
Okay. The president obviously is trying to build consensus on the tax cut extensions. The president met with House Republican holdouts yesterday. They're stalling the Senate budget bill over tax and spending cuts. Fox has told Trump moved some potential no votes to yes votes. You've been meeting on Capitol Hill now for weeks, but House Freedom Caucus Chairman Andy Harris now says he's open to the creation of a 40% tax bracket for those earning $1 million or more. So, Mr. Secretary, are you planning on keeping taxes high, raising taxes for the rich in order to get the tax cuts like no tax on tips through?
Maria, the negotiations are moving along quickly. I don't want to talk about anything that's in the bill. That it's crazy to negotiate and talk about specific things in a public forum. But I will tell you that the progress has been substantial, and I want to compliment the Speaker Johnson, Leader Thune, Senator Crapo, and the Chairman Smith. Just so you know, the House has been working on their bill for almost a year, and in anticipation that we would be here. Leader Thune and Senator Crapo are moving this through the Senate very quickly, and with President Trump's leadership, President Trump is now weighing in with his preferred policies, and as you know, he is remarkably persuasive, especially when he speaks to Republican congressmen.
And I know that you're meeting with the Republican Study Committee today. What will be victory for you in the coming couple of weeks? Before we know that a bill is headed to the president's desk by the end of May, which is what Mike Johnson wants, what do you want to hear? That you have the votes in the Senate, that you have the votes in the House to actually get a bill, including the tax extensions, done?
That's exactly it, Maria, that we are moving in unison toward getting the bill done as quickly as possible. And Maria, don't forget that within reconciliation, we are going to have the debt ceiling. That is something that is playing in the background. Yeah. So we are going to do debt ceiling through reconciliation, the so-called X date, when the government runs out of money. Yep. We will never hit that. But if we don't get something done in June, we will go on the warning track. And as every baseball player knows, you don't want to be looking over your shoulder and hit the wall. Yeah.
Secretary, what is the backup plan in the meantime? Because, I understand the long-term issues, and I certainly understand this as a national security issue. 100%. I get that. And what the president is doing is monumental. No president has taken this on before. So we recognize the massive issues here. However, in the meantime, you're talking about $6 trillion in market value loss in a week. You're talking about CEOs now unwilling to give guidance for 2025. Is there a response or a backup plan for what seems to be corporate America shutting down corporate activity? IPOs put on the shelf, M&A deals put on the shelf, CEOs not giving guidance. I spoke with one CEO last night. He said, we're cutting our capital expense budget. I'm cutting my travel budget. I'm doing everything I can in terms of cutting so I don't have to cut jobs yet. But that is, of course, on the horizon because we're cutting capital spending. What do you do in that regard in the coming weeks and months as we see more CEOs talk that way?
Well, I think in the coming months, CEOs won't have to talk that way. And what can we do in the coming weeks is, we have opened this process of negotiations country by country. It's going to be a bespoke, tailored process for each country. And as we strike these trade deals, I think that we will see greater and greater certainty. We have a delegation from Vietnam in. I was at the ambassador's residence, the Japanese ambassador's residence here in D.C. for the Cherry Blossom Festival last night, which was fantastic. And a Japanese delegation will be coming soon, South Korea, India, the UK. So I think we are going to see a rapid succession of these deals that will give CEOs greater certainty. But I think nothing gives greater certainty than getting this tax bill done.
So what are the metrics and the milestones that we should be looking at, that the market should be looking at to feel confident that this is working? You just named a number of countries. Is that what you want? Do you want to see 3, 5 new deals in the coming months in order to feel like, okay, we're getting somewhere?
Well, that will be on trade, and then we talked about tax, and then Maria, I wanted to address. In the meantime, there is one of these. I've seen it very often in my market career. There's one of these deleveraging convulsions that's going on right now in the markets, and I think it's in the fixed income market. There's some very large leverage players who are experiencing losses. They're having to deleverage. I believe that there is nothing systemic about this. I think that it is an uncomfortable but normal deleveraging that's going on in the bond market. And I expect that as we see the leverage come down, the risk managers tapping people on the shoulders, telling them to bring their books down, which is what happens every couple of years as leverage builds up, then the market will calm down. The other thing I can tell you is I'm giving a speech this morning at the American Bankers Association, and we're going to be talking about the substantial financial deregulation that's pushing forward. And Maria, if we think about President Trump's agenda, tariffs came first. Now we're going to get tax done. We are pushing for deregulation, and the deregulation, unfortunately, takes longer to kick in, but I tell you, when it does, it's going to be powerful. And part of the deregulation in the banking industry will be changing what's called the supplementary leverage ratio, which will allow banks to buy more treasuries without a big capital charge. So, I would expect that we have created a new buyer for treasury securities, or a larger, more durable buyer.
The fixed income issue has been a debacle this morning, and that is why I assume rates are moving up. The yield on the 10-year. We were wondering if there was a deleveraging issue, and whether or not China is dumping treasuries. Is that what you see right now? Is China dumping treasuries to try to put pressure on this market?
Maria, I think it works against their purposes if they are dumping treasuries, because if they're dumping treasuries, then they have to buy something else. If they sell dollars, then they strengthen their currency. And as I said earlier, they've actually been weakening their currency, which is a loser for everyone.
Right.
And again, when I hear all these stories that the dollar is no longer going to be the reserve currency, if you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset to me.
Yeah, very good point. But the dollar has been plummeting. You know that. What's the impact of that?
Well, again, I want to reiterate the U.S. has a strong dollar policy, and part of it is the overall, some of the bilateral, the dollar versus the euro, the dollar versus the yen. The Europeans are going to spend more on defense. So we are seeing upgrades, finally, to European fiscal spending. And it was President Trump's pressure on NATO, on the military alliance to say, pay your fair share, and that will bump their economy. In Japan, the yen has been strong, but again, that is the result of very strong Japanese economic growth, rising inflation expectations, so the Bank of Japan is raising rates. So, all that's natural, Maria.
Secretary, I have one more final question for you, and I know that you gave a very thoughtful interview recently, and you talked about the fact that we've got millions of people still in poverty right now. You're about to give a speech. No doubt you're going to touch on the macro story, and increasingly people are expecting that we are headed for a recession. I spoke with one CEO over the weekend. He said we are already in a recession. So how do you deal with that as you are trying to implement all of these new policies like deregulation when you've got the market expecting a sharp slowdown in economic activity, sir?
Well, Maria, I think what the CEO may have alluded to, and I've said it in the past, that the manufacturing sector under the previous administration was in a recession. So what we are doing is what I call reprivatizing the economy. 80% of the job creation was either government jobs or government adjacent, which is education and healthcare. And this massive amount of government borrowing. So we are also getting the deficit under control, right-sizing the federal workforce, and then on the other side, they're going to re-lever the private sector through smart, safe, and sound bank deregulation. And then, as this CEO said, they can come out of recession because I expect that long-term interest rates should come down as we get the budget under control, inflation under control, energy prices come down, and then the private sector will have room to grow.
Yeah. Well, look, let's hope that this huge population of people that President Trump delivered in that election, which includes Republicans, Democrats, and independents, will wait this out and get to the other side. And not continue this loss of value. But, Secretary, we appreciate your leadership. Thanks very much for being here this morning.
Listen to what Trump's senior trade advisor had to say about the markets. Roll it.
Sure. The first rule, particularly for the smaller investors out there, you can't lose money unless you sell. And right now, the smart strategy is not to panic, just stay in, because we are going to have the biggest boom in the stock market we've ever seen under the Trump policies. We will find a bottom in this market quickly. We will hit 50,000 on the Dow easily by the end of this term.
All right. Kevin O'Leary joining me now. Right. 50,000 on the Dow by the end of Trump's term. Almost double, actually more than double from where we are now. What do you say to 50,000 by the end of 4 years, Kevin?
I think that's a long time to speculate what the outcome's going to be. I think you've got to take it quarter by quarter. Let's just deal with hysteria right now about the market declines. Let's assume we close down another 1,000 points today. I kind of, I understand why there's a lot of teeth gnashing, and I get it. But I'm a kind of a long-term guy when I look at PE ratios. So we took the market down from sort of 22 PE to now around 17.5 as of this hour, which historically is not a bad place to enter if you want to think about long-term sustaining returns. So I'm looking at it, and I've started to nibble. I'm not going to catch the bottom, but 17 PE sounds pretty good to me on the S&P 500. And I look at the pillar, you got to look at the E too. Everybody's saying it's the end of the free world as we know it. I don't really view it that way. I make an assumption that we're in a pretty strong economy right now. Those job numbers on Friday were very, very good. I have not seen a decline in orders from my own tear sheets and private companies I'm invested in. They are not yet ready to call recession. And now we go to the question of, okay, what happens regarding all these tariffs? And I would like to see, as many others would, one of these 60 countries or 50 countries that are calling in to cut a deal. You got two pieces to this negotiation. One is remove all tariffs. I'm 100% for that. Like, I don't care. Pick your Vietnam, Israel, India, Euro, Canadians, whatever you want. Everybody's willing to cut a deal to zero tariff both ways as part of a package. It's the trade deficit punitive aspect here. Taiwan's a good example. There's a $200 billion trade deficit because we buy stuff from them that we don't make. I have a greeting card company there with a lot of Hewlett-Packard laser cutters, And we put it in Vietnam because we didn't want to put it in China. And Americans are going to pay a lot more for their greeting cards. Love Pop greeting cards are made in Vietnam, and they're shipped every day from there. And it's all American equipment invested there. Our money, American money invested there. So we're going to have to work that out, and the government there wants to work it out. A lot of moving parts here, Stuart, but I believe in economics driving everything at the end of the day. And I don't think the Trump administration is stupid. They know they've got to start negotiating deals and show the world what the outcome of this is going to be.
Okay, then we've got America's top banker, Jamie Dimon. He says Trump's tariffs will lead to a rise in inflation and slow the economy. That would not be good for stocks if he's right.
Yes, if these tariffs stay in place in perpetuity at 25% rate, he would be right. But I think this is a giant negotiation. And, you know, Trump is not shy of being bombastic. We've learned that over 12 years. And you may find the rhetoric painful, but that's not the key. The key is the signal. And if all of a sudden all these countries want to go to zero tariffs, and then we have to work out case by case what commodities we want to let into the country. We need aluminum right now, so we need the Canadians' power to make it. So that's crazy to tariff ourselves on aluminums if you're in the U.S. And I'll tell you one that I find so intriguing that you would understand, Stuart. I was in Geneva last week for the global trade show for manual watchmaking. It's a $5 billion business between Switzerland and U.S. While I was there with all the CEOs, all the watch companies, because I'm trying to buy watches, you know that, and I want piece uniques, so I'm dealing with these guys directly, we get whacked with a 34% tariff directly. Now, here's the dilemma. If you're a watchmaker, pick Rolex, pick Patek, AP, the demand for your watches worldwide far exceeds your ability to manufacture them. Some of these companies only make 4,000 watches a year. So you're going to delay shipping them to the U.S. while we work this out because China will buy them all from you, or Asia, or Singapore. And that's their dilemma. And I say to them, listen, guys, you want to keep on side with American consumers with your brands. I'm one of them. And just let things play out a little bit here. Give us a few weeks to work this out. There's a case study right there. Don't take my watches away from me. That would be crazy. And I speak on behalf of millions of collectors.
Okay, I hear you. It's a giant negotiation which is not going to be concluded anytime in the immediate future. Kevin O'Leary, thanks for joining us, Kevin. Good insight today. Thanks very much.
Welcome back. Let's check markets here. Futures are indicating a decline of better than 700 at the opening of trading, about an hour and 15 minutes away. That's down almost 2%. The Nasdaq's down 263, 1.5%. President Trump's reciprocal tariffs took effect at midnight last night, and China is retaliating again this morning. It is announcing an 84% tariff on all U.S. goods after President Trump confirmed that the U.S. will move forward with a tariff of 104% on Chinese goods. Beijing also adding 6 U.S. companies to its, quote, unreliable entity list and 12 companies to its, quote, export control list. JP Morgan Chase Chairman and CEO Jamie Dimon releasing his annual letter to shareholders this week, writing, tariffs raise prices and slow down economic growth. We are here now with the man himself to talk more about the backdrop in this Fox Business exclusive. JP Morgan Chase Chairman and CEO Jamie Dimon. Jamie, great to see you.
Very happy to be here.
Thank you so much for joining us. And you know, congratulations on this incredible career and your leadership. We appreciate your leadership.
Thank you.
You've seen so many crises in your days before, financial crisis.com, et cetera, et cetera. How does this moment in time compare to those?
Yeah, well, it's nothing like 08, okay, so in clarity, nothing, and the 2000 .com thing was very brief. I mean, it lasted like 9 months or something like that, so.
But how about the financial crisis when you almost paid $2 a share for Bear Stearns?
Yeah, we paid 10.
I know.
We're still very
You wanted 2 initially.
You know, Paulson wanted 2. I wanted to get the deal done, and so it doesn't compare to that. The world was massively over-leveraged. There was a mortgage problem. You're going to have, you know, $500 billion or maybe $1 trillion of actual real problems. The banking system's not that leveraged today, but it's serious. And it was serious before the last election. We have a huge, complex geopolitical situation, huge fiscal deficits, not just here, but around the world, sticky inflation, which I personally think will not go away so quick. And then you have, you know, what's going to happen to tariffs, what's going to happen to trade, what's going to happen. So, you know, tariffs and trade are just part of that mix. They don't completely stand alone.
So what do you think about the tariff plan?
I think it is perfectly reasonable for someone to say that trade was unfair. There were unfair trade things. And remember, it's not just tariffs. It's tariffs, I think they have the VAT wrong, how they understand it, and I think they should really get a better understanding to make it easy to negotiate. But there are all these non-tariff barriers around food and energy, and then subsidies, which China's famous for. So it's totally reasonable to say we want to make trade better. But I also want to point out to the Americans, we have the best economy in the world. Our GDP per person is $85,000. China's is $15,000. So you got to put a little bit in the context. But and then of course when they put the tariffs in, that was way beyond what people expected. That will cause a little inflation, slow down growth. But I hope what they really do is let Scott Bessent, who I think is a professional, negotiate. And I know Japan's here. I gather Korea, Vietnam have called, and then eventually Europe. Get those things done quickly. If you want to calm down the markets, show progress in those things, and let Scott take the time. Trade deals are very large and very complex. They can't be done overnight, but you really have to have teams working them to get them right.
It sounds like you're taking a calm head in the face of all of this, despite the fact that we've seen $6 trillion in market value wiped out in about a week.
Yeah, I'm taking a calm view, but I think it could get worse if we don't make some progress here. And of course, trade wars, you saw China raise the rates today, and people are going to get angry and they're going to have responses, and every country's got choices. So there are short-term choices, there are long-term choices. And I also want to point out, if you kind of look forward in the next 60 days, every company is going to be telling you guys, what it means to them. I think today I saw Delta remove their guidance. And things like that will affect stock prices again. So it's not over yet. And then you've seen tremendous moves in swap prices, asset prices, treasury prices. There's a 10-year treasury auction today and how they go. So yeah, but let them settle down, take a deep breath, negotiate some trade deals. That's the best thing they can do.
I want to get back to what you just mentioned, the earnings season, in a moment, because I spoke with a number of CEOs just last night, and they said, I'm cutting expenses, I'm cutting my CapEx, so I want to get your take on how that plays out. But look at the 10-year this morning, Jamie. It's up almost 17 basis points. Yeah. And I just spoke with the Treasury Secretary, Scott Bessent, and asked him if part of this is China selling treasuries. Here's my conversation, a snippet of it with Scott Bessent. Watch this.
There's one of these deleveraging convulsions that's going on right now in the markets, and I think it's in the fixed income market. There's some very large leverage players who are experiencing losses. They're having to deleverage. I believe that there is nothing systemic about this. I think that it is an uncomfortable but normal deleveraging that's going on in the bond market. And I expect that as we see the leverage come down, the risk managers tapping people on the shoulders, telling them to bring their books down, which is what happens every couple of years as leverage builds up, then the market will calm down.
Is China jumping treasuries to try to put pressure on this this market?
Yeah, I think it works against their purposes if they are dumping treasuries, because if they're dumping treasuries, then they have to buy something else. If they sell dollars, then they strengthen their currency. And as I said earlier, they've actually been weakening their currency, which is a loser for everyone.
Right.
And again, when I hear all these stories that the dollar is no longer going to be the reserve currency, if you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset to me.
Yeah. Jamie, your reaction?
Well, he's exactly right. You have a lot of deleveraging hedge funds and players out there, which he obviously is quite experienced with things like that. And that is the initial effect. There will be other effects, and we still are the reserve currency, which will be true for a long time. But a very important point, China and Russia have made it clear they want to kind of dismantle the post-World War II system. And I think the goal of all this trade stuff should be to make Europe and our trading partners, Japan, Korea, Philippines, stronger, not weaker, bring them closer as we build up our military. And any trade that protects military, that we should definitely do. I mean, we made a lot of mistakes about, as you know, pharmaceuticals, shipping, pharmaceutical ingredients, penicillin.
That we're so reliant on China for all of this stuff.
We can't rely on any potential adversary for things we need for our military. And so, there I'm quite sympathetic. That we should do, that's absolutely paramount.
And you wrote about this in your annual letter to shareholders this week, and you talked about national security being the #1 priority here.
Right.
But it takes time to get the supply chains to America. So in terms of getting this done fast, I mean, how much faster can this happen? And was there another way to get corporations to move supply chains here other than forcing them to it? Because we've been talking about this for a long time.
Yeah, you can't really force them, but like I said, there are tons of ways that people manipulate trade, but, and as subsidies, and as land grants, and as guarantees. We need to do that for rare earths, pharmaceutical devices, semiconductor chips. We should do it right. I mean, we shouldn't do it in a way that wastes a lot of money and lets corporations feed at that great tax trough or something like that. And it could be done, but it will take years. But we need to start right away. And even some of these other supply chains, a lot of companies are too reliant on one country. It'll take them to move. But I think you got to separate, making sneakers from making guns. One is like really important. One is, it's not as big a deal. So,
Great point.
But the point about national security is economic security, national security are almost directly related in the long run. Hopefully when these wars get resolved, and I hope in the interest of Ukraine, where they have sovereignty when it's over, and the interest of Israel, and not being constantly attacked by terrorists on 3 sides, you need to keep the economic alliance together. I think it would be in Russia's and North Korea's, Iran's, and China's interest to fragment the Western world. And I think that would be the biggest long-term mistake, and I'm talking about over 30 or 40 years. I don't want to read the book about how the West was lost.
Yeah, but at the same time, timing is of the essence, right? I mean, you just mentioned a moment ago that we're headed into the earnings series. You're obviously reporting earnings on Friday, so we're sensitive to that. But is there anything you can tell us about the environment right now in terms of loan demand, in terms of defaults? Because while all of this is happening, you've got, for example, your economics team predicting a recession this year, and you've got corporations saying, I'm cutting back on spending and investing right now.
Yeah, so normally I don't pay that much attention to anecdotes, but you heard them. They're real. I hear it from just everybody now. I'm going to cut back a little bit. I'm going to wait, see what happens. That is kind of recessionary talk. So, we've been in this kind of very soft landing for a long time. Consumers have money. They were spending money. Corporate is making profits. I do remind people part of that was because of our extraordinary fiscal spending. We borrowed and spent $11 trillion since COVID. And that obviously drives a lot of growth. It drives corporate profits. So I think what we're going to see now is corporations making announcement after announcement about, don't expect my guidance to be true. I'm going to hold back here a little bit. These are long-term decisions they have to make. They may want to see the tax bill, which hopefully they can get done in July. So yeah, I think you're going to see a slowdown. I think the economists are probably right to say that you should expect that.
Well, how significant a slowdown? I mean, are you seeing defaults?
Not yet, but I expect them. And the other thing, which we haven't had any slowdown or real recession, and COVID was so short, I almost don't include it, and so long that if you have rates going up a little bit, and inflation is sticky, and credit spreads are gapping out, which they're going to, I think you'll see more credit problems than people have seen in a long time.
And yet, you've got to get ahead of it and cut expenses now. You've talked about the 10% to all of your different groups at J.P. Morgan.
Yeah.
You say J.P. Morgan's going to be fine, but we could see a softening of the macro story.
Yeah. So J.P. Morgan, I did say to the J.P. Morgan people, the 10%, but I think we just got a little sloppy in the last 5 years. I'm kind of mad at myself. I remind people, what kills companies is complacency, arrogance, bureaucracy. And the little speech I gave, I was talking about Sears and AMP and Eastman Kodak. And it's amazing to me that these companies, they just get too lax in what they do. And we got a little bit of that too. So going back to killing bureaucracy, we put some headcount controls in place, not because we're not doing well, not forcing people to cut. I call it just like going for your run and eating your spinach. It's not a big deal. We can handle that, and we'll become a better company. People are having a lot of fun, by the way, raising their hand and saying, why are we doing this? Why can we cut this out? And whenever they're with me, I say, just do it. Go ahead. You got my permission.
So are you hearing that from CEOs as well in terms of business managers? Are they now going to start pulling it in and cutting back on various expenses?
I think you're going to see a little bit of that, yes. Yeah.
But how significant would you expect that? Do you personally expect a recession?
I am going to defer to my economists at this point, but I think probably that's a likely outcome.
Mm-hmm. Yeah. Because markets, I mean, when you see a 2,000 point decline, it sort of feeds on itself, doesn't it? Because it makes you feel like you're losing money in your 401k, you're losing money in your pension. You got to cut back.
Yeah. I always remind people markets aren't always right, but sometimes they are right. And I think this time they are right because they're just pricing in uncertainty at the macro level and uncertainty at the micro level, at the actual company level. And then how it affects consumer sentiment, it's hard to tell. You know, consumers still have jobs. Wages are going up at the low end, which I think is a good thing. But if companies start cutting back, yeah, the consumer sentiment changes and business sentiment changes. You know, I think you've already seen business sentiment change a little bit. Hopefully, you know, no one's wishing for that, but you know, hopefully if there is one, it'll be short. But but I do think fixing these tariff issues and trade issues would be a good thing to do. That will get one major uncertainty behind us. We have the strongest economy in the world. It would be good not to add to the uncertainty out there.
How long would you wait to see these fixes take place?
I don't know. I mean, I would, whatever they can do, you know, like I said, trade is really complicated. I mean, these trade agreements are thousands of pages long. It is product by product and area by area, non-trade barriers, subsidies. You know, there's tons of food. If you spend time with just food alone, you'd be shocked how many different food agreements there are and disagreements and protection of local farmers, which almost every country does. So the sooner, the better.
Well, in terms of
they should get at it.
In terms of the capital markets business, you've got to believe that trading is going to do well in the first quarter. But we've sat here with various CEOs who said, I'm not going to do my IPO right now. Right. I'm not going to do my deal in terms of M&A. We spoke with Ken Leon from CFRA, and he says that the first quarter was very weak for those kinds of capital markets businesses.
Yeah. So,
without giving anything away, because you're reporting earnings.
Yeah, so I always tell people volatile markets generally are good for our capital markets trading business, but they're generally not good for, you know, equity, debt issuance, stuff like that. So, you know, I mean, it's very important. JP Morgan is going to be in fine shape, but almost no matter what happens, because we always run the company so we can serve people in good times and bad times, just like we did during the great financial crisis. But I do expect the bad part of these volatile markets isn't what it does to a JP Morgan. It's what it does to the capital markets and the ability of companies to raise money. So IPOs are being canceled. You know, a couple of hung deals out there in the high yield land and bridge loans, and that just slows everything down. And so that's the bad part of these volatile markets. It's not that it's bad for us. It's bad for small businesses, middle-sized companies. You know, large companies can usually get the funding they need.
President Trump has been trying to put America first. Is he doing that while also alienating foreigners to America? Somebody told me last night, look, I'm trying to do a deal in Canada. They say we don't want to buy American in any way right now. Do you see any anti-American sentiment?
Yeah, we've lost a couple of bond deals already because they're not mean. They simply say that, you know, look, we'd rather just do this with a local bank than with a U.S. bank. Look, we could overcome that. You know, that's why part of me thinks that don't let this go on too long because it's causing cumulative damage, including huge anger at the United States. Like I said, if my goal would be keep the allies together, get them together, keep work on that. You know, and you fix the trade. Whether it's unfair trade, fix it. Doesn't matter if they're an ally or not, it should be fixed. And I think there are legitimate complaints about military spending. You know, they need to spend more in the military. So I hope what you saw, like for Europe, is a wake-up call. Fix their economy. You know, they have huge bureaucracy, you know, red tape, which I now call blue tape. And, you know, and if they fix that, that'd be good for them. And then, you know, pull them closer and keep the Western world together.
And the European Union, by the way, I don't know if they're unified. I mean, it's called the European Union, but, you know, Germany is in a different place than I think Italy is. So how does President Trump do that?
Yeah, Europe should seize the moment. There's the Draghi report. I think they all acknowledge they need to spend more in the military. They all acknowledge that I think their GDP per person has gone from something like 75% of America's to 50% of America's. I mean, they got to look inside and say, what did they do? And it's literally rules, regulations, and red tape, and anti-business, and, you know, too expensive tax systems, and labor laws that were meant to protect workers. But very often these laws are passed, they have the completely opposite effect. You know, they protect existing workers, but not new workers. They don't adopt technology fast enough. They don't have enough innovation. They could fix that. And I actually think you now have, between President Macron, Chancellor Merz, Maloney, Keir Starmer, those people are coming together, and they're kind of saying all that. Yeah. They have to do it. It's hard, you know, in Europe.
And Maloney is on her way to the U.S. to meet with President Trump on the 17th. In your annual letter, you wrote about how successful J.P. Morgan is moving, what did you say, $10 or $12 trillion a day in terms of the amount of business that you're handling, and you gave the kudos to all of your people. What's interesting, when I was reading that, I thought, it's interesting that here's a bank that's moving so much money and doing so much activity, and you're not even the biggest in the world. Chinese banks are much bigger. So tell us about that a little, and the competition that you face when you go up against some of these large Chinese banks for business. Because I think most people realize now China is an adversary, if not an enemy right now.
Yeah. Well, I put them in the adversary category, not enemy. But, well, first, we compete with banks in every country. We compete with fintech here. And that $10 trillion, it's important to put it in context, $10 trillion of money being moved, $3 trillion of securities being bought. But it's also representative of the enormous flows around the world. So when people can estimate, they predict the effect of global flows of capital, it's hard to do. I mean, you're talking about hundreds of trillions of dollars a day that are moving around as people making all these different decisions about where to invest and where to send their money and who to pay, things like that. So the Chinese banks are bigger in terms of total assets, not in terms of market cap, probably about the same size. They're supported, they're state controlled. So it's very, very different. So they're kind of part of how they look at it. And, China has this state, I'm going to call it state capitalism, kind of this mix of subsidies and how they run things. And it gives them the benefit that they can run their country as a whole. And we don't. We have a democracy, and it's very different. But I do think what I say about us is we need to get our own act together. We need to get, if you want to have America be very strong, our own health care, our own infrastructure, our own immigration, our own regulations, our own red tape, our own affordable housing, we could be growing at 3% a year. And I think we should be striving to that. And have we done that the last 20 years, our GDP per person would be $15,000 more. So, to me, China isn't. If you look at us, 85,000 GDP, theirs is 15. We have all the food, water, and energy we need. They import 10 million barrels of oil a day. They're surrounded. They have a very complex geopolitical neighborhood. Philippines, Korea, Japan, Indonesia, Vietnam, Pakistan, India, Russia. And they're kind of angering some of those folks, too, because of what they're doing in the South China Sea. We don't. We have peace. We have the Atlantic and the Pacific, and we have peace with Mexico and Canada. We're kind of blessed. We're blessed with the gifts of God and the gifts of the founding fathers. And so we should just get our own act together, and we'll be fine.
Are there areas around the world that you see right now that are doing well?
Well, America's probably doing the best. And, part of that is fueled by the fiscal spending. I remind people, we are exceptional. We're not quite that exceptional. If other countries had borrowed and spent $1 trillion, they would have had more growth, too. But there's another side to that, the sticky inflation and things like that. But there is no... Look, there are a lot of countries do a lot of things well, but there's no country with quite the innovation we have, quite the capabilities. This energy, it's an unbelievable thing because not only does it reduce the cost for all of our industrial companies, but that LNG that we can send to Europe is cleaner for Europe because their alternative is coal, and they need it to be secure. So to me, we have this unbelievable position in energy. Our financial services, we have the best financial markets in the world. I'm talking about all of it, capital markets, hedge funds, private equity, investors. And it is part of the flywheel that creates all this innovation you see. And you don't just see it in New York, you see it in Silicon Valley, but you see it in St. Louis, in Kansas, in Austin, in Nashville. And so, this country is unbelievable. Democracy works in spite of the fact, we seem to have a lot of polarization these days.
I want to get into policy with you, Jamie, and get your thoughts on what policies are needed now. The tax cuts conversation is going on. We're going to take a short break and tap into the energy capacity in America and the efforts right now to extend the Trump tax cuts. I'm talking with the chairman and CEO of JPMorgan Chase. We'll be right back.
Against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on. They've become a rich country because of people, again, that were in the White House that allowed this to happen. Hundreds of billions of dollars a year they'd make on us on trade, and it shouldn't be that way. And I have a great relationship with President Xi. I hope it's going to stay that way.
That's President Trump, who sees the communist China threat exactly the way it is. He told reporters about putting that extra 50% tariff on Chinese goods if Beijing does not reverse its retaliation of 34%. The addition would bring the total tariff on China to 104%, something that Beijing cannot afford. China is vowing to, quote, fight to the end in its response, even accusing the United States of blackmail. Joining me now is the Heritage Foundation Senior Research Fellow for China and National Security, Steve Yates. Steve, your reaction?
Well, Maria, this is a nice, healthy dose of Chinese projection. It's kind of astonishing in some ways that this challenge snuck up on them somehow, even though I think pretty much telegraphed from Trump's first term there was going to be a desire to engage in renegotiation immediately on all the terms of trade. But China's reaction, I think, hopefully is a lesson to the wider world. They want to hit us on soybeans and things like that. It's basically a message to farmers that in a time of crisis, China expects you to side with China, not America's economy. I doubt that's where farmers want to be. On fentanyl, they're pledging to pull back on cooperation. So they're saying they'd like to continue to poison Americans. Not exactly a great negotiating strategy. And then they say they're going to pull back on Hollywood films. Well, who knows? Maybe that would finally free up Hollywood to do something pro-American and maybe tell the truth about China crushing Hong Kong and Tiananmen and all the goodness that they've missed.
Absolutely. Well, yeah, good luck with that, Hollywood. Look, I've been making the point for some time now, Steve, that the Chinese economy is much weaker than people realize. My audience knows, I know, we are aware of the weaknesses in China and the weakness, the weakened position that Xi Jinping is in. I reported this months ago that Xi Jinping, I was told, had a mini stroke a couple of years ago, and the Politburo actually took the military away from him, that he does not oversee the military. That was given to his quote-unquote brother. It's not his real brother, but one of his deputies. So, and then recently they actually took out one of his deputies out of the military. So all signs tell me, my opinion, that China is much weaker than people expect. And if you're talking about a 104% tariff on Chinese goods, it's over. They're not going to be able to handle that. They will have to bend to President Trump. Am I right?
Well, absolutely right. And this has actually been a long-term truth that America has always had much greater leverage and never seemed to find a way to use it. In an odd way, our large consumer market is quite powerful, and China doesn't have a lot of alternatives. And no matter what they want to block by way of American sales going into China, that will hit a few large companies perhaps. But the broader state of play is that China has a much smaller and weaker hand, and they are at risk at home, whether it's demographic, population change, but definitely financial institutions, and their dependence on this export model is profound. So yes, we finally found leverage, but we have to see whether it'll be used. So far, Xi's leadership has been willing to pick fights rather than negotiate and stand down.
Yeah, a different stance from others like Japan and South Korea who want to do deals with President Trump. Secretary Scott Bessent announced that the U.S. is opening trade negotiations with Japan right now. He posted this on X. President Trump has tasked me and the U.S. Trade Representative Jamieson Greer to open negotiations to implement the president's vision for the new golden age of global trade with Japanese Prime Minister Shigeru Ishiba and his cabinet. The Treasury Secretary gave Larry Kudlow more details last night and broke this news. Watch.
I'll reiterate what I said last week. For countries that don't retaliate, we are at a maximum tariff level, and it is my hope that through good negotiations, all we will do is see levels come down. But that's going to depend on the other countries. And President Trump is going to be personally involved in these negotiations, and he believes, as many of us do, that there's been an unfair playing field, so the negotiations are going to be tough.
So, Steve, your thoughts on where this goes now, and are there other non-tariff issues that President Trump can counter coming from Beijing? Because we know that they've been, undermining America at every turn.
Well, frankly, I think that Bessent might be the best Secretary of Treasury we've had in my lifetime, and he is the perfect person to articulate what this strategy is and to lead these kinds of negotiations. Also, Japan is the perfect target for where the priority ought to be. It is the next largest economy after the United States, competing with the People's Republic of China. So if we're going to have global rebalancing of investment, manufacturing, natural resources, rare earths, and things like that, that, the U.S. and Japan cooperating is profoundly important to reordering those systems.
Yeah.
It also kind of puts the lie to the notion that the Trump administration is anti-ally. This is a huge opportunity for Japan and the United States to fix things. That is the single best foot forward in countering China, in my view.
Let me get your take on Panama and the canal. U.S. Defense Secretary Pete Hegseth arrived in Panama last night. A security conference is underway with defense leaders from Central America. President Trump is still pushing to take control of the Panama Canal back from China. But, of course, here, China is upset that the United States is about to take it back. Hong Kong-based company CK Hutchison's already did a deal with BlackRock. They were planning to sell the 43 ports to BlackRock-led investment group, including those 2 ports near the Panama Canal. But now that's in jeopardy because China is making noise about it. Panama's top auditor is now accusing CK Hutchison of owing $300 million in dues, Steve. This is a new one. Now they owe money because they claim they haven't paid their dues. But the fact is China's upset that President Trump recognizes that China has been trying to dominate the Panama Canal.
Well, this is another area where America is showing up where it hasn't in a far too long a period of time. And the encroachment that China's had in our hemisphere in many ways has been an open door. And now there's going to be a real conversation. No administration in forever has had a Secretary of State and Defense go to Central America and lay down what America's priorities are, show up and engage the region and tell the truth. And frankly, Hutchison has been untouchable for the longest time, and now this auditor coming out with these issues, Xi's government trying to say, no, they won't sell to BlackRock. Really, this is, I think, a good way to put China on its back foot. But America's got to stay engaged. We need American capital to show up to build this hemisphere, I think, as a great foundation for reordering the trade patterns we've had.
And that's an important property, right? That's an important shipping lane right there at the Panama Canal.
National security and global trade, 2 high priorities.
Boom. Steve, great to talk with you. Thanks so much. And markets are bracing for another major sell-off this morning on Wall Street as economies across the globe settle in for President Trump's tariff reality. Fox News Digital's political correspondent Brooke Singman now with more this morning. Brooke.
Good morning, Maria. That's right. So Asian markets falling sharply today as President Trump, speaking to reporters on Air Force One, says he does not want a trade deal with China unless the deficit is solved. Listen to this.
When they look at the fact that we have $1 billion trade deficit, when you look at the trade deficit that we have with certain countries, way over $1 billion per country. But with China, it's $1 trillion. And we have to solve our trade deficit with China. We have $1 trillion trade deficit with China.
Is open to tariff negotiations with worldwide leaders. The president says he has already spoken with some who are urging him to lower some of these tariffs.
I spoke to a lot of leaders, European, Asian, from all over the world. They're dying to make a deal. But I said, we're not going to have deficits with your country. We're not going to do that because to me a deficit is a loss. We're going to have surpluses or we're at worst going to be breaking even.
Stock futures are down ahead of the market open this morning after Dow futures fell more than 1,500 points last night. Trump expressing uncertainty about today's market performance, but he is maintaining that the tariffs will help the U.S.
I don't want anything to go down, but sometimes you have to take medicine to fix something. And we have such a horrible, we have been treated so badly by other countries because we had stupid leadership that allowed this to happen. Now we have hundreds of billions of dollars is pouring into our country. On a monthly basis, it's pouring, it's already started because I put tariffs on. And eventually it's going to straighten out and our country will be solid and strong again.
Cryptocurrency also dropping more than 6% last night, and the markets are expected to open back up this morning at 9:30 Eastern Time. Maria?
All right, Brooke, thank you so much. Brooke Singman, the White House is confirming that more than 50 countries have reached out to begin trade talks as investors raise their recession outlooks. Treasury Secretary Scott Bessent dismissed the need for a recession over the weekend. Here he is on this program last month with the same sentiment. Can you guarantee that we're not going to have a recession?
No reason we need to have a recession. Could we have a pause as we go from this incredible level of government spending, which is just unsustainable? If we had kept going the way we were, we would have been in a financial crisis. And President Trump has put the brakes on this. We are going to get this spending under control. We are going to bring manufacturing back home, and we are going to make the country more affordable for working Americans.
Joining me now is TJM Institutional Services Director James Urio. James, good to see you. Thank you so much for being here. There are reasons to believe that we saw some signals of perhaps a de-escalation of this over the weekend when we heard from a number of countries saying they want to negotiate with the White House. What is your reaction to all of this morning?
So to me, it doesn't really matter unless it's China that's coming to the table to negotiate. 170 different countries tariff us. Most of those doesn't really matter to our bottom line. With China, it does. To me, it's like, you know, an old Western movie and there's a gunfight and then at the end, it's just the bad guy and the good guy left looking at each other. And that's what we're angling towards right now. So it doesn't matter when Trump says things like, we got to get this trade deficit thing taken care of. Well, that's a tall order. And that's why the stock market doesn't really like that. It's 3-to-1 what we import from them versus what they import from us. To try to get that to be 1-to-1, that's something that would take decades, not years. And for him to be saying that that's his goal right now, those kind of things are what scares the market. It's not the changes, it's the pace with which he wants to make them.
Yeah, I mean, and the pace has been swift. But of course, Netanyahu is at the White House this morning. The tariff situation is going to be a part of the conversation. We could see a deal there. We could see a deal with Vietnam. You're saying even if we see a free trade zone in Europe, it doesn't matter. You need to hear is China for you to feel like this is going to de-escalate?
Mostly yes is what I'm saying. I don't want to say it doesn't matter because it definitely does matter. But everything is really pointed towards China and China toward us. One thing this is going to sound somewhat paradoxical, but one thing I kind of like is that all markets around the world are getting pummeled today. I'd much rather see that than just our markets getting pummeled, because that would be the market telling us that we're going to lose this and our economy is going to take the brunt of it. Right now with the market saying it's mutually assured destruction and everything is going down. That's one of the reasons that gold is actually up today. And of course, treasuries have been, going through the moon for the last couple months because that's one of the few things that people can buy. But I think it matters in Europe. It just matters a lot more in China.
Okay, let's take a look at yields this morning as investors are piling into U.S. Treasuries on now these worries about stagflation. Gold prices, as you say, above $3,046 right now, and the 10-year is below 4%. Federal Reserve Chairman Jay Powell says the larger-than-expected tariffs, he's calling them that, will likely boost inflation, slow growth. He's pushing for a wait-and-see agenda on rate cuts, but the market is expecting 4 rate cuts at this point. Here's Powell. Watch this.
The tariffs are larger than people were generally expecting. That much now at this point. And you'll know more as you start to see the effects on the economy. So as the months go by, it's hard to say exactly when you'll know. We're just seeing that these are new policies, not just the tariff policies, but the other ones as well. And there'll be regulatory changes, significant regulatory changes. You have to really look at all of that to see what the overall effect will be.
President Trump is urging Powell to cut interest rates and, quote, stop playing politics, James. So TD Securities is revising its end 2020 forecast for the 10-year to 3%. That's down from 3.8%. We've gone from expectations of a cut of 1 cut from the Fed in June to a cut of 3 times this year in a hurry. Your thoughts on where the yield ends this year and how many cuts the Fed makes?
So a couple things. First of all, if we are to believe the data from the last 2 years, is that 10% of the asset holders in this country were driving 50% of the consumption. Analysts will always tell you that the stock market isn't the economy and the economy isn't the stock market. And that's usually true. This time it was. Asset prices going through the roof was fueling the demand. Now, if we believe that inflation is always and everywhere a monetary phenomenon, like Friedman told us, then zapping $5 trillion in 2 days from the stock market should go a long way in getting rid of the inflation thing. So do I think a recession's coming? Yes, I think we're probably already there if you take the buying power out of the people's hands who were driving the inflation, who are driving the expansion, let's say, of course it's gone away. So I think we're going into recession now. I think the Fed is going to ease. I think the U.S. Treasuries are the last man standing, and gold is going to join them now as the only things you can actually buy in an environment like this. That being said, I think most of this is over, and I think Donald Trump's proclivity is to walk back things when they seem like they're the most serious. This is like Lucy with the football. We've fallen for these things before, and right now the risks exist for him to talk nicer about tariffs and about global trade and markets to rebound, in my view.
All right, so the bottom line is you're expecting a cut in June, James?
I'm expecting a cut in June now. Yes, I definitely think we are. And I think the market's going to be right about that. Again, I think the reason was inflation. Inflation is less of a worry now.
Yeah, oil prices, I want to point out, below $60 a barrel this morning. James, good to see you. Thank you so much, James Durio. We got rates plummeting, you got oil prices plummeting, and we are just getting started this morning.